My name is Thomas, and this is For the Common. I'm super pumped today because we're kicking off a new series and playlist for the channel. So first, welcome to the Beginners Lounge. The Beginners Lounge is a place for new investors to come together and learn and hopefully take some shortcuts on what can be a very painful and costly investing learning curve. And you're in good company because we all start from the place that you're starting today. And good for you for getting out there and trying to learn and be the best investor that you can be. So I'm proud of you. In this video series, we're going to be covering common new investor mistakes that I see folks on the web, my family, my friends make, and we've all been there, and that includes me. I've made every investment mistake in the book, and that includes the one that we're talking about today. So hopefully with this series, we'll be able to examine those mistakes, and I'll be able to save you some time, money, and a little bit of pain. So the common new investor mistake that we're talking about today is that you trade way too flippin' often. And I'll be the first to admit there are so many different investment styles out there. So if you're the day trader who's raking in six figures every 6 months, then hey, good for you and keep doing your thing. But my guess is that that's not you. And the way that I know is that you're watching this video, but it's also the fact that it is very, very difficult to be a good, consistent day trader and execute a strategy that will make you money consistently. The best traders out there, they work at hedge funds like Citadel or Bridgewater, or they work at big banks like Goldman Sachs. They have PhDs in math and a massive amount of computer power that's backing them and that's implementing trades in nanoseconds with algorithms or different applications. Not to mention, these people have better data than we do. They know more people, and they have better good old-fashioned internet connections than we have. And all that stuff really matters when you're trying to day trade. And how do I know that? Because I used to interview traders with that exact investment style. So do we feel that with our Fibonacci retracements, our relative strength, moving averages, or good old-fashioned trading feels, we're going to be able to go and beat that type of competition consistently? Well, I've tried, and it's really tough to do consistently. And all those tools that I mentioned that are on our side, our competition has those too. So trading, it comes down to a coin flip. Or actually, with that tough of competition, it's probably worse odds than a coin flip. So does investing have to be this difficult game with bad odds? I mean, if it was, we should just stick to poker or betting on red. Well, and I'm not trying to dog on people who trade frequently, and by all means, go out and try it. You know, we all have. But when you really sit down and think about it, how many multimillionaire traders are out there? Well, maybe there's a decent amount. How many billionaire traders are there out there? Maybe a few. I mean, you would think, right? If you get the secret sauce to the market, you would just repeat, replicate, and then boom, you'd be good. And YouTube will make you think that there are so many successful traders out there all driving their Lambos. But if we sit back and think, how many really wealthy and famous people are there out there that have done it through trading? Well, I, as I mentioned before, have interviewed portfolio managers and analysts at some of the best investment firms in the US. And newsflash, they all suck at trading and timing. The reason why is that the market is so complex and there are so many cross currents. It comes down to a really important takeaway that it is pretty much impossible to time the market. So I want to go back to billionaires. So how many billionaires can we think of that owned a big piece of a company and that company just kicked butt for years and years and grew like crazy? Well, there's actually a lot of examples. Like you think of EVs or computer companies, banks, oil companies, makeup, toilet paper, all have created billionaires. And I'm not sure on that last one, but I'm pretty sure. But importantly, that is how trading too often can also negatively impact you, and it's the cost. And I'm not talking about taxes or the trading cost, though that is something to be aware of if you're trading a lot. It's the cost of selling a company or a stock too early. And it happens all the time. You might execute a trade, have a great idea, and in 2 or 3 weeks, you might be up 20%. Nice. What do you do now? Do you blow it out and move on to the next trade? Well, you could, but that's tough to do. And importantly, I believe that the way individual investors can win is by following the secret that a portfolio manager taught me many years ago. And I talk about it in a strategy video. I'll post it over my shoulder here. But the secret is that investors will overestimate the downside of a stock, but they also underestimate the upside of that same stock or the company. And to explain, a stock can only go down 100% from when you invest in it. And I know that sounds crazy and it's painful, but investors will underestimate the upside potential of that same company or that same stock. And if you own a really great company for years and years, the wealth creation can be unbelievable. I mean, just look at companies like Apple, Tesla, Disney, Costco. All of them have essentially minted millionaires if you just held the stock for long enough. And the key is that that secret applies to individual investors, but also people on Wall Street. And that's how I think that individual investors can win. They can tilt the odds of this somewhat rigged game in their favor. And they can do that by finding really amazing, high quality companies that have bright futures, can stay in front of competition, and then also have capable management teams. And then you dream the dream. You invest in that company, and then you do nothing for years. And that sounds pretty great. But importantly, that is the way that I believe that investors can win and can beat Wall Street at their own game. You can learn to identify amazing companies and then own them for years. Just because you can trade stock every day does not mean that you should trade every day. And in fact, it could be that the stock that you decide to sell could be your most costly investment decision because you sold the stock too early. So I encourage you to be an investor, not a trader. I hope you got some value out of the video, and if you want to learn more about identifying really amazing businesses to own for the long term, I would encourage you to follow along on the journey and subscribe. Thank you so much for checking out the video, and we'll see you next time.